Hey, Michael, I read a really interesting piece yesterday, just in terms of how we might be looking at this a little bit wrong. Those of us who follow stocks and know about reversions to the mean, that this is different because the mean that you're going to be reverting to is constantly growing. It's happening as all of these new companies, new investors are kind of buying into that. So the mean itself, the line is one that's moving pretty sharply higher. You agree with that theory?
The most important thing to understand about Bitcoin is a bank in cyberspace for people that don't have the ability to run their own hedge fund. It's not a stock. It's an asset class. And so, you know, if I put $1 billion into a bank and then I came back a year later and I put another $10 billion in the bank is not overvalued by a factor of 10. The bank is just 10 times bigger. People are using Bitcoin to store their monetary energy for the long term. And so the price is a reflection of the monetary energy in this bank in cyberspace.
Hey, Michael, I just wanted to go back to a question about your holdings of Bitcoin personally and potentially the holdings of members of the board or executives in the management team. And the reason I raise this is I think there's a lot of companies now that are thinking about buying into Bitcoin, and yet there are employees and or board members who are either own Bitcoin already or buying in knowing perhaps that their company is going to buy Bitcoin. How you think about that from a legal perspective, because historically, if one company was going to effectively buy another company, it would actually be considered either illegal insider trading or just a breach of the fiduciary duty, because effectively you'd be taking advantage of corporate information.
Okay, well, the first thing to note is that Bitcoin is property. It's not a security. And that's a very critical idea. Property means you can own a house or you can own land, and your company can also buy land. With regard to public companies, the key is to make sure that you have adequate disclosure of all your holdings that might be viewed as a conflict of interest. And so you can be sure that I went to great lengths to adequately disclose to every member of the board the exact extent of my Bitcoin holdings before we even started to deliberate this. You see, Bitcoin is the most widely held investment asset in the world right now. We have congressmen, we have senators, we have members of government, we have CEOs, we have 100 million individuals out there that have it. You're going to find that lots and lots of people have this property. I think that whenever you're running an institution, be it a charity, an endowment, a government institution, a corporation, the key is to make sure that you're very transparent in your holdings before you enter into deliberation that might impact that company.
Right. It's $1 trillion. So, I mean, there's stocks that are $1 trillion. I'm trying to figure out what type of total market cap you'd need until you wouldn't ask that question anymore, Michael. I mean, people with gold, if a company decides it wants to put its treasuries in gold, I don't think they'd ask the CEO, well, did you buy some, you know, you're going to move the entire gold market, but it's a much bigger market. But I'm wondering if there's a number where you don't ask that question, where it becomes actually would you worry if you went out the yield curve on bonds or if you went into corporates on your treasury? Would you have to make sure that people on that were at the company weren't buying corporates in the meantime? I don't know. What do you think the number is? But at $1 trillion, you could still almost make the case you can move that.
There's a $500 trillion monetary planet, and the outer layer is currency. Then you've got stocks, bonds, real estate. There's $10 trillion worth of gold in there, $1 trillion in Bitcoin. The Bitcoin is going to flip gold, and it's going to subsume the entire gold market cap. Then it's going to subsume negative yielding sovereign debt and other monetary indexes until it grows to $100 trillion. Once it gets to 10 trillion, its volatility will be dramatically less. And as it marches toward 100 trillion, you're going to see the growth rates fall, the volatility fall, and it's going to be a stabilizing influence in the entire financial system of the 21st century.
Shepard Smith here. Thanks for watching CNBC on YouTube.